Your office cracks me up.
I know it's a sore spot. We do webinars every couple of weeks, and I know it's a bit of a sore spot.
So in case anyone doesn't know Brian, I've known Brian for a couple of years, but I've known Greg longer,
Mhm.
and that's kind of the neat thing. Because I was actually helping Greg when his Rockstar coach was away. I was helping Greg do an inspection on one of his very first properties, and I don't even think he was doing the ecom stuff yet at that point. So I'm not sure if he even met you at that point. But then I met you through Greg. You guys are doing the ecom stuff,
Yeah.
and you're a member of Rockstar Real Estate. So I'm assuming you have some real estate.
Yep.
Okay, good. So you're allowed to be on this show then. Other than your own home, which you almost sold. I hope we can get to that story.
I should have.
That's hilarious because I was just in Grant Cardone's office, for example, and he actually talks about he thinks it's selfish for us to own our own homes. He thinks everyone should rent, and it actually probably costs you quite a bit in opportunity. But we'll get to that. We'll get to that.
Yeah.
But for the listeners' benefit, like Brian is a dynamo of a wealth hacker. It's hard to Brian, how do you describe yourself? Because when I say wealth hacker, you have your own really successful business, both in the actual execution of doing e-commerce and Amazon vendor, plus you have Ecom VIP, where you help coach, mentor students to become e-commerce, to quit their jobs and do e-commerce. And you have some real estate. And then I didn't even know this until the weekend that you pretty much already retired on dividends.
My plan was almost at completion in 2013 when I know I saw the title of this podcast. I was actually let go in 2013. I was almost at kind of like the completion of that part of the plan with the dividends.
Mm-hmm.
So yeah, I mean, it was something that I latched onto. It seemed to make sense. We can get into that a little later about exactly what I did with it. But the market, kind of, we'll say I ended up timing the market pretty good.
Mm-hmm.
I know all the research says that you can time the market, but part of like what we've started doing with the options now in this group, and what I ended up doing with my own, the vast majority of my own holdings, I ended up timing the market. You can kind of see when things are a little bit too hot, and you can see when
Mm-hmm.
things seem to be on sale.
Right.
In general, they'll make their way up, and there's going to be dips.
Right.
So, there's things you can do to play with that.
Right.
It's not
We'll get to
perfect.
that, Brian. We'll get to there. I want to start. So where would you like to start with your story? Because I was trying to find a picture of you. I was looking at your LinkedIn, and you haven't updated it since, like, I don't know, 2013, I think 2014.
Yeah, probably left my office behind me here, and my car. My car's even older.
So if anyone's watching the video, because this will be on the podcast later, so a lot of people will be listening to this. I understand Brian and I were already having a laugh because Brian is in his warehouse / office. So in the background, I can see just cardboard boxes.
There's a whiteboard too. We do some work sometimes.
So Brian, where does the story begin? You were yeah, I recall part of your story that you were in IT. You were in IT,
Sure.
and you're trying to figure a way out, or were you already on your way out?
Yeah. So while I really enjoyed doing the IT thing, I mean, I went to school for it. I've been doing it since I was young. Like, I started programming pretty young, and I was just into computers. I was kind of it was like the likely path for me. And I got into it, and it was great. I did I like the tech stuff, but I didn't like the bureaucracy. Being on call in like 3 different time zones at one point, doing 100-hour weeks, which I did for many into the years.
Mm-hmm.
That kind of that really wears on you. That.
Mm-hmm.
So I was quickly figuring out that doing what I was doing wasn't going to get me where I really wanted to be. Doing those kind of hours, like trading your time for money, it wasn't going to work to get me where I wanted to be. There wasn't enough time, and I gave all the possible time I had. Like, it was literal, like, 100-hour weeks. More time in co-location facilities, freezing and with a bunch of machines, than with my family or out in the sunshine.
Mm-hmm.
So Yeah, so I tried to figure out, okay, what else can I do? Can I put in, 10% more time learning something else entirely, and really accelerate the money that I'm making, and kind of make it work for me instead of me continuing to work for the money.
Mhm.
So that's kind of where it started. The seeds were already there. Like way back when I was, I guess, towards like ending, finishing high school, I've been putting money away for a while, and I had a bunch of mutual funds, and so at that time, I walked in. I don't know if it's okay to go into a story about
Yeah,
how this.
please.
Yeah, so it's a true story. It was my parents' like financial advisor. They had mutual funds. We weren't really sophisticated investors by any means. And I went over. And I'm like, okay, so can you explain to me how this, how your compensation works? Like I was reading, and I was, I read that I should ask you about it. And so he explained like no load and front load, and back end funds. And I'm like, okay, I get that. But can you explain how you actually get paid? And so he tried to kind of explain. I'm like, okay, hold on a second. But I've lost money. Did you get paid? He's like, yeah. I'm looking around his office. It doesn't look like my office. And it's a nice office. He's got, nice jewelry on. I know he's got a nice car outside. I'm like, did you get paid?
Yeah,
He's looking around. I'm looking around. It's like, well, yeah, of course I need to be compensated for the work and the management I do of your account. I'm like,
yeah.
but you lost me money. This doesn't seem right. Why do you keep
Mhm,
getting paid?
mhm.
So at that point, shortly thereafter, he kept me there for about an hour. He tried to walk me through it. I'm like, yeah, I think you're going to need to sign this money over to me, and I'll figure this out myself.
And you were
Um,
16 at the time?
I think so. Thinking back, I think it was a little, maybe 18 or 19.
18, okay.
Yeah, yeah, it's somewhere in there. Um, I remember I drove myself over there, but I think it was just before I went to university, so it would have been about 19. But I was still living at home. Yeah, so that's kind of where it started there. I'm like, this doesn't make sense. Let's pull this money out. I used that money. I started a small like computer hardware sales and consulting kind of thing. Went through school and all that stuff. This whole time I've been reading stuff like, um, and I actually pulled some books off the shelf that's up behind me. So this book, it actually came from the financial advisor that I fired. I kept his book though.
Mhm. Love David Chilton. Big
Sorry,
fan.
Peter, if you're watching this. Um,
Unlikely, not many people watch this or listen.
that kind of got me started. It was like something I gave my dad. My dad's like, "Here, you read this." Um, and then I don't know. Sometime after I was reading, the typical like rich dad stuff. I don't know
Nice.
where the rich dad poor dad went, but I've got the cash flow quadrant book up on the shelf still. Um, and then somewhere around like 2005, someone that'll be familiar to you, Derek Foster released a book.
Uh-huh.
And the first one was Stop Working. Here's How You Can. I think it was self published by him. And it really resonated with me because it was super simple.
Mhm,
It was written by a Canadian guy who
mhm,
wasn't like, super flashy and things like that. I'm pretty, low key kind of thing. And like this works for me. A lot of stuff that was available, it's like it was all American.
mhm.
Even to this day, a lot of stuff's American. It's getting better now. Um, some of the strategies just didn't they don't work here in Canada. They don't exist for us. And the way that people do their investing and show their wealth is a little different than I felt comfortable with. So anyway,
You get along with Derek really well.
yeah, this stuff it totally made sense to me. I
I
realized
think he's on his way back.
he was releasing another book. I kept reading all this time, and that one was in I think about 2008, halfway through 2008, just as the markets were kind of taking a nosedive. So I'm pretty sure I put my name on a waiting list at the library, and I was one of the first, maybe the first person to read it from the library here. Um, yeah, I didn't even buy it. Sorry, Derek. Apologizing to lots of people out there. Um, but like I said, it wasn't all me. It's all like help from other people and their books and what they've done beforehand. It's not really won't say original ideas. I just pounced on them. And that book was Money for Nothing and Your Stocks for Free.
Mhm,
And he went into basically how to get the stocks that I was going to buy anyway because their price was coming down as the market was taking was tanking. I was going to buy them anyway, and he showed a simple way of selling options to get paid to get ready to buy it and then buy those stocks at a cheaper price anyway. So I'm like, you win all the way around. And then you keep these stocks and you get paid dividends, increasing hopefully forever.
Mhm.
So, and when, some of these companies, I don't know,
Oh, sorry,
people,
Brian, what year was this?
that was, so I looked at my initial purchases. They were at the end, like December 2008 through
Oh.
to February 2009. So, as an example, I had a quick look. So, TD Bank in Canada was one of the banks I bought. Your standard disclaimers: don't do what I did. I was crazy, and you could lose all your money. But this is what I did, and I averaged in at about $20. So I bought somewhere between 18 and 22, and overall it averaged around $20.30 or something.
Uh-huh.
I think today it's at $74,
Before, yeah, so around 74. I trade
74
TD, so
something.
yeah.
Yeah. So mostly, I mean,
Any splits? Do you know if there's any splits
there
along the
was
way?
one split in 2014, midway through, I think.
Right. So then the
2014,
real
two for
value is
one.
like 150 then.
Yeah, I guess so. That's right.
Oh, okay. So anyone who's listening or, have a chance, go back and look at what was going on in 2008 with the real estate market.
All the
Sorry,
markets.
the stock market, all
Yeah.
stock markets. And and just like Brian said, he averaged in for around $20 and the stock has since split. So then the real value would be around 150.
Yeah, that worked out.
Oh,
So,
do you remember what the dividend was then and what it is now?
I think it's like no, it's about 4% now. It's like 3.97 today.
Mhm.
It was a little higher because of the price back then, but it's increased about 10% a year, roughly.
Oh.
Of course, the internet, don't quote me exactly. The numbers aren't exact, but it's something like that. Like this year, for example, they're planning to do a 10% increase by the end of by the time the year is done. Um, yeah, so that's worked out pretty good. They've been, a company like TD, as an example, they've been paying dividends since 1867. They've been
Jesus.
increasing their dividends since 1969,
So
nonstop. So they've
so
been paying dividends longer than I've been alive. No, sorry, increasing dividends longer than I've been alive. And they've been paying dividends since the country was founded, basically.
yeah, I was
Right?
just thinking like that's the birth year of
So
Canada.
the A Act, right? 1867, if I
Yeah,
remember my history right.
sounds right. That's because
Yeah.
I was one of the hockey team.
So
Americans the 76ers, Canada's 67s.
yeah, so companies like that, it doesn't take much guessing to figure out. There's only a handful of Canadian banks. It's only a couple of big insurance companies. You've got pipelines and oil. That's basically that's more or less what Canada has. So I bought a handful of these stocks, and I bought lots of the shares, and I sat on it and collected dividends. So basically, over time, the shares have paid for themselves and have provided income.
Mhm,
Um, I think the biggest mistake at this point, for that part of the plan, the biggest mistake I made was not selling everything I owned and moving in with family members in a trailer, and then buying everything back and more a couple years later. Again, don't do what I did or what I'm saying because it's crazy. But looking back, it's always easy to look back in hindsight, right? To say, here's what I should have done.
mhm,
I went partway into the plan. I
mhm,
bought what made sense, what felt safe,
mhm.
with assets that I had,
Right.
but I should have gone all completely all in with everything, like taking the bus to work, sold my house. I mean, that's the kind of catastrophe the markets were facing. I mean, it sounds crazy to say it, but that would have been probably one of the maybe a better plan than just sitting on it.
And then with the proceeds, you were essentially ready to retire.
It got me very close to where I wanted to be, basically to live on that money forever. Yeah, very
And
close. So at that point, though, shortly after, I was let go from my job. Good paying job. I liked what I did, like I said, but I didn't like the bureaucracy, and I was close enough to being able to completely live forever on what I had put together, that I knew that I wasn't going to go back to a regular, 9 to 5 thing. I knew that wasn't in the plans. I didn't know what I was going to do. I can admit that really had no idea. I just knew that I had lots of time to decide. Um, Like my wife went on mat leave, I guess 8.5 years ago now. Um, and yeah, I haven't gone back to a regular full time thing at all since 2013. I've taken a contract to do some tech work on the side. I've got the e-commerce thing. I've got the dividends. I've got real estate, but regular savings. So yeah, we've got the Ecom VIP group. Yeah, so we've
We'll get
been able
into
to
that. We'll
yeah,
get
we've been
into
able
that.
to diversify. So
Diversify.
at the same
Diversifying.
time, I know that can be a dirty word.
I
My
know,
own
but not for
holdings.
you. I'm laughing because everyone, and don't judge Brian on his backgrounds, but like Brian is very successful. So diversify is like, trying to protect from downsides
Mm.
versus you're just trying to diversify your upsides.
Yeah, that's true. That's true. When you start learning, when you
I
start
think
going
multiple streams
through,
of income is more like common terminology versus diversify.
yeah, and I think that's probably a better way to term it, is multiple streams. Just diversifying for diversifying's sake, I think is might personally, I believe that's not good. I think it's outright, basically, I'll say it wrong. If you look at the people who have the most wealth in history, they were super concentrated, like
Mhm,
ultra concentrated,
mhm,
whether it's their own businesses or a handful of businesses they know extremely well,
mhm.
not diversified in many different industries, at least not until they're deca billionaires with people
Yeah,
helping to manage.
yeah, like
That's a
Buffett.
different,
Yeah.
yeah, that's a different case. But himself, he still says to this day, like, don't invest in things you don't understand. And
Mhm,
he didn't understand tech, and he missed the bubble and the crash,
mhm,
but he understands things like Coca-Cola, right? And sees candies. These things he understands. He gets it. You can go and buy Coke. You can go
mhm,
buy candy from that company.
mhm,
Um, so he does hold to that, and many investors, the biggest investors in history, the oil tycoons and railroad tycoons, most of their money was in those industries. They didn't
mhm,
go 100 miles wide. They went 100
mhm,
miles deep.
mhm. Well, granted, I was reading an article about the family that owned Dofasco in Hamilton. That was they doubled down when they bought Algoma Steel, and
Yeah.
I think most of us know, anyone who invests in Hamilton knows like how that story went. But yeah, there's some, yeah, and then for example, the only real estate they owned was their own home and a
Mm,
cottage.
wow.
That was the only other assets they owned. That
Wow.
and like $2 billion worth of steel companies,
All in on the company.
all in on the company. So yeah, there's some. Well,
Uh,
even Buffett. I think it was an old video. Buffett was saying three companies. It's all anyone ever should need. Three companies. That's the most. So he's in. I think it's the middle of his talk against like financial wizards and stuff.
mm,
I believe it's actually. I saw the video actually. I think when he was, because this goes back to your financial planner story about that $1 million bet he had with the hedge fund company,
mm.
right? And he beat them quite badly.
Oh, I
Uh,
remember this. That's right.
right. So the hedge fund's performance versus the S&P 500 in the index fund, and also
Yeah.
the hedge fund, they charged. I only heard this is the first time I heard this. Is the fee? The fee structure is 2 and 20,
Mm.
meaning 2% of funds under management and 20% of profits. Brian, would you accept that?
No. No, that 2%, that'll kill you, let alone the 20%.
Yeah, let alone the 20%.
2% for nothing, no matter what. Come on.
We
No,
should get into that business.
you pay for performance, right? That's happening now. And now you've got fee-based advisors.
Mhm,
And I think that makes more sense, where you give them a flat fee and they'll advise you. Um, I get that, but even for my own business, like anytime where a service provider says, the cost is a percentage of your revenues. No, no, I'll find another way to do this. No
mhm,
chance am I giving up a percentage of my revenue. No,
mhm.
not doing that. It doesn't make sense.
No, Brian. Hindsight being 2020, and also I'm interested in like learning lessons.
Mm,
What what was it that made you go all in as much as you did back in 2008? Because a lot of people are there's a lot of concerns right now. Inverse yield curve.
yeah,
S&P 500 just passed 3,000. I think we're very close to passing the all time high, which was only just a few months ago, I believe.
yeah.
Like, what do you see?
So I guess there's a couple things. We've been passing highs for most of the last 10 years, basically after the crash, right? It's been
Mhm.
nonstop. Every year, every few months, somebody says it's going to crash. Um, I had a large pile of cash waiting. Also, I admit I was one of those people saying I think
Mm.
it's going to be a crash. Let's hold a ton of cash, and we'll go in. And not like last time, we're really going to go all in, waiting for it. But then a decade's passed, right? And so the worst thing that you can do is not have your money working. That's a key tenet of investing also, is to always have your money working for you.
Mhm.
So that kind of goes counter to timing the market. But there's other ways you can time the market. So yeah. So how did I get to that point of saying, yeah, it looks like this is really the bottom? Well,
Mhm.
mass hysteria and panic in the media. That's one.
Mm.
When the
Mhm.
media is going crazy, like truly losing their minds every
Mhm.
time you turn on the TV in regular media, not financial media.
Mhm.
I read financial news, but looking at regular news also, when they're losing their minds about how bad things are, something big is happening. You don't have
Mhm.
to follow things super close. You'll see it everywhere. Your friends will talk about it. Somebody on the corner, go pick up your kids from the bus stop. They'll mention it. It'll come
Mhm.
up everywhere. That was part of it. It was coming up everywhere. Um, the other thing is I had been looking at fundamentals for years at that point. Um, Fundamental investing, Buffett. I've read a number of Buffett books, whether it's biographies on him or other investors that invest in similar ways, like looking at Benjamin Graham, for example. I know I pulled out some other books, like Benjamin Graham's Investor. This is like the Bible of um, of investing, value investing. So if you want to know how to value companies, and if you want somebody with a heck of a track record, this is the guy that Buffett worked under. This was Buffett's mentor. So this is the book that you go after. Now it's not a thin book, and it goes into insane detail, charts and figures. It goes really deep,
Mhm.
but this this is the guy that Buffett worked for. He
Mhm.
worked for him, and that's how he ended up learning how to value companies really at its core. So I use
Is he
similar
still around?
things. Sorry.
Is he still around?
No, I'm pretty sure this was he was older when Graham was young and learning. Um, or sorry, when Buffett was learning. So I think
Mm.
Benjamin Graham is 1976. He passed away.
Yeah, born in 1894.
Yeah, yeah. So it's old
Almost as
school.
old as country.
Yeah. Old school, but fundamentals, looking at debt to asset ratios, current ratios, looking at assets and liabilities, earnings per share growth. I'm looking at things, looking at their financial statements. Like you gotta have a look in detail. So is this a real company? Is this thing for real? So even when the market takes a dive, you know that you've got a handful of companies that you trust, that you really know well, that you know that they've been paying dividends for as long as the country's been a country, for increasing dividends longer than you've been alive. That's
Mhm.
really that's amazing.
Right.
And you're looking for a real company that's
Mhm.
growing.
Mhm.
You're looking at P/E ratios as well.
Mhm.
So the price to earning ratios, when they start to get out of whack, when they're going into the mid 20s and 30s and above for regular companies, whereas tech companies often hit those kind of ratios. When a regular company, like if a bank starts getting up there, that's crazy, right? You've got there's problems happening. I actually prefer the Schiller Cape. It's a variation on the price to earnings ratio. It's a cyclically adjusted price to earning ratio. Sorry if I go too technical on some of this stuff. Um, I,
Actually, some people like it. Some people
I,
complain we didn't
I
go too technical with Habib, but
I enjoy this stuff, and these are the kind of things that like let me. I'm really analytical, so I put stuff into spreadsheets and I track this stuff like crazy, and I pay for all kinds of data as well, so that I can get real like historical data. You can usually get market data from the last year or two, but you got to pay for the history, or if you want the stuff that's like to the second updated. But I love this stuff. Anyway, so the Schiller Cape. It gives you an idea of the cyclically adjusted P to E. It should be a little more accurate than the regular P to E. Um, what else? The price to book. And dividends. So all of these things kind of go all together. to give you an idea of some of the fundamentals. And then you
Right.
go into some of the things that Buffett talks about as well, like is there a defensible moat? You know, the basics. Is this a business that someone can walk into, or is this a railroad that
Mhm.
you can't compete against CN Rail?
Mhm.
You're not
Mhm.
going to.
I know, I
Uh,
was having that conversation with someone. If you were gonna compete with CN Rail, how do you start?
I mean, you got to use their lines, right?
Yeah.
You're
Go
gonna
go
be
try to get that real estate for the lines.
yeah. Good luck. Exactly.
We
That's not
can't
a
build
great revenue
pipelines
source.
in the middle of nowhere. Good luck getting like, railway lines through the GTA.
Yeah, I mean, that's a nice revenue source for them too. Like when, like the tech bubble actually helped them when people were laying fiber optics by the thousands of kilometers. You know who owns the rights of ways going across the country? The railroads,
Right.
right? They lay them next to the railway lines oftentimes.
Awesome.
That's not free.
Of course not. That's why we're real estate investors. I wonder if they charge them rent. They probably do. Probably
Yeah,
charge
I
them a
don't know
maintenance fee.
exactly. Yeah, I don't know how all that works exactly, but I'm betting it's not free, and I bet it's not cheap.
Definitely not cheap. Now
Yeah.
now, Brian, when someone says stock options are risky, what do you think about that? So then for anyone who's joining late, and understand Brian was essentially able to retire off of a stock option strategy. So
So the options definitely helped me to accelerate, or to kind of improve the price that I was able to get into these stocks for. That's for sure. It's just I stopped there though at the time. You know, I
Mhm.
basically I wasn't educated enough
Right. You were
to,
already so educated though.
you know,
Like, you got rich.
all these books that are piled up in front of me. I got a bunch of other ones that I can mention a little later for more background. And I've got 50 of them behind me, all just related to finance stuff. Um, and I love it. And yeah, I read a lot, but the options weren't something that I felt that I knew enough about, and I wasn't finding enough credible information to make it a strategy for what I could do. You know, for like value investing. That I mean, there's financial bibles about it, and there's living proof with Buffett, for example, of how that can work. And looking at somebody like Derek Foster, like how he was able to use dividend paying stocks, like there's living proof kind of all around us, and it made sense. But the options felt like I didn't have enough to put together a strategy that I could trust a significant amount of money. I did it enough to get into the stocks that I wanted to get into,
Mhm,
but I didn't feel like I knew enough to be confident and go all in with turning the option part into a strategy.
mhm.
So I ended up selling. So at the time, I sold. So I didn't buy all my stocks using the strategy, but because I got impatient, basically, I saw where the market was hitting bottom, and my options weren't being
Filled. Yeah.
were yeah
You
they didn't
just
hit
the price didn't go low enough for your orders to get your
exactly.
to be assigned
So I
stocks.
started getting antsy that the market was going to
Well, you did the right thing.
go back up. I'm like, I'm just going to buy this stuff. I think it's worth
Yeah.
it.
Yeah, yeah, yeah.
Turned out to be the right thing. Again, hindsight, right? Um,
Don't get greedy.
Yeah, it's easy to, and that's something that I felt I had a problem with the options. It's so easy to get greedy with them because it's a button click, right? You can get into a lot of trouble really quick if you push
Oh,
the
yeah.
wrong button. If you sell a call,
Yeah.
um,
Very
you're
different.
going the wrong way, and that could cost you a lot, especially if you dig into or past your margin limit. You're going to get a phone call, and they're frantic. I did get a margin call in 2009, I guess, um, from at the time it was iTrade. It used to be iTrade, and it became Scotia iTrade. Um, I got a frantic call at like 10 a.m. They're like, "You're about to, we're going to sell off your some of your stocks. It's random. I can't control it. I'm just calling to let you know you've got a margin call." I'm like, "Oh my god, what do I do?" And in 2 hours, like 2 o'clock, they called again. They're like, "So what are you going to do? What are my instructions?" Like, instructions? I'm like, I felt like I was on a spy movie or something. I'm like, instructions? I don't know. Can I move money in? He's like, go ahead. I'm like, how does that work? Doesn't it take like 2 days? Yes. What are my instructions? I don't know, man. Just I guess sell so do what you have to do. I don't know. So I did get a call at the times. I went too far with one of my picks. Um, but you learn. Um, but then, yeah, so I didn't know how to go any further. That was like steps 1 to 3 kind of thing. It's Basically exactly what Derek Foster had talked about in the, I guess it would have been the second book, the Money for Nothing, Your Stocks for Free. When he went into, selling the naked puts, you end up buying the stocks you want to buy anyway at a discount price, and you get paid for it. Awesome, good, great all the way around. But that's like steps 1 to 3. And I stopped there, and it worked fine for me. It worked fine for him for the most part, as well, as far as I can tell. I was also on his newsletter from like 2013 to 2016. So I kind of followed him for a while, watched his couple interviews that he did on television, um, a few of the videos he did. So it looked like it worked out for him. But it always felt like, shouldn't you have your money doing even more? It's great that you're getting dividends and it basically paid for themselves. That's awesome. But I felt like you could do more with this. And I knew the options always kind of lingered in the back of my mind. Like, I think I can do something with this, but I'm not sure exactly what.
Mhm.
Um, and everything that I found online about options, most of it is really spammy. Like, beyond, like, if you look up how to make money online, that's terribly spammy. If you look up how to make money in stocks, you get penny stocks and all kinds of crap. Most of it is complete trash and totally spammy. And I think a lot of it, personally, from what I've learned at this point, totally wrong. I wouldn't touch it with a 100-foot pole.
Mhm.
Um, but when you guys started talking about what you were doing with the options, it made sense.
Yeah.
Super safe companies and how the process works and how you can get out of your positions and continue rotating your capital. That part was probably the most interesting to me. I've already had enough
Right.
background to understand how the rest of it worked. I already have a stable of companies that I understand really well,
Yeah, I
and
had
I've been
no idea
following.
how much background you had when you reached out to me, because you heard Matthew's interview, was it? I think it was Matthew.
Mhm.
You heard Matthew's interview and then you reached out to me?
Yeah.
And yeah, we none of us had any idea how much background you had in this. But this was the secret sauce that you were missing.
Yeah, this was exact. So I think when you were asking about, what did you learn at the weekend thing, and how's it working? Well, to be honest, I have enough background that it was a couple of missing pieces that I needed.
Mhm,
It's a
mhm,
1,000-piece puzzle. I have a good chunk of it put together. I'm always learning. I still have a ton to learn still. It's like,
mhm,
I've put together the sky in this puzzle, but I
mhm,
still, or maybe the ground, let's say, but I still have a lot of, the foreground and the sky and everything else put together.
mhm.
Still have a ways to go, but yeah, there's some background there. Um, but yeah, I keep reading about like net stock investing, about value investing. All this stuff is fascinating to me, um, because I think, one of the things with these dividend paying stocks too is you can't fake these companies. They can do all kinds of things with their balance sheets. Even when I'm looking at, like, I was looking at like net stocks for a while, super cheap stocks, basically selling at an extreme discount. They're like dirty stocks. No one wants to touch them because they think they're going down, but they still have some life in them. Like one last puff of the cigar butt is what Buffett used to call these kind of stocks, and that's actually how he started his investing career. Um, Based on these kind of net stocks, mostly learned from Benjamin Graham. Um, but then looking at these stocks, one thing you can't fake is increasing dividend payments for decades. You can't fake that. Your financial statements, there's all kinds of trickery companies can do with it to offset and delay and hide and do all kinds of stuff. And they can get away with it for a long time,
Mhm.
many years. Whether it's, you talk about like Enron or
Enron's the
BlackBerry,
ultimate.
all these things,
WorldCom,
yeah,
Bre-X,
whether they mean to
fake
or not.
examples.
Lots of examples. Sometimes they mean
Yeah,
to, and sometimes maybe they don't, but the stock market still keeps treating them like they're still, awesome, but yet they have nothing to back it up. So instead of looking at, just your fundamentals, those parts of the fundamentals, look at what they've done for shareholders. Have they paid you to eat steak lately? Have they literally paid you? Could you take that money and go do something with it? So if you're looking at an investment just for appreciation, whether it's real estate, or whether it's a stock, or whether it's a classic car, no, not for me. I wouldn't. Don't do that. That's insane to me.
mhm,
What am I going to eat with tomorrow? I just gave all my money into this whatever investment vehicle is. How can I live on that? How can anyone live on that? It doesn't. For where I'm at anyway, it doesn't make sense to me. I really believe that the investments should throw off money.
right,
Um, yeah, that's a kind of a key tenet for me for
right,
the majority of my investments.
right.
they need to be throwing off money,
Right.
and increasing, so that's proof to me that they're real. There's no trickery happening.
And that's why I like the strategy that Omar Matthew teaches via Stock Hacker Academy so
Yeah.
much, 'cause, I don't know how else to produce this much cash on cash return. I have no other means. I've been looking
Yeah.
for a while. Like, I'm sure you've been looking for a while too.
And, I've tried a few other things as well. Like I mentioned, net stock investing. Um, we'll say that's maybe a little more advanced thing to get into. I won't go into details on it. Basically, it's the net current asset value of a company's cash, adjusted accounts and receivables, inventory, all the good stuff, minus total liabilities. There's different ways to factor in liabilities, whether it's long term or short term, whatever. But so I got into that a little bit. I've got some Japanese stocks, for example, net holdings, but there's a big problem with them. It doesn't fit into the strategy because most of them don't throw off dividends, at least not substantial dividends. And so your money's tied up for typically a good year, maybe even up to a couple of years, depending which
Mhm,
studies you believe is the best way to go. It's normally about 12 months. Some people hold it up to 2 years.
mhm,
So your money's tied up. You can't really pull it out because these companies are like flatlined at near death for a year or so until you're hoping for something to happen, the market to realize their true value, or some kind of event for their stock to double or triple or quadruple. So there you can make your money on say 60 or 70% of these stocks if you pick right, but your money's completely tied up. Whereas with this option strategy, you've got money being thrown off consistently,
mhm.
on a recurring cycle. Basically, every few days, depending on how many options you're writing, every few days, you've likely got something expiring and some cash flow happening. Yeah, that's kind of a win, isn't it?
How excited are you?
Pretty excited. I think for me, for where I'm at, um, and my belief in these companies, that's a
Mhm,
key thing. I think
mhm.
people are people might discount the importance of knowing and believing in the companies that they're writing options on. Um, just writing options on the things on the stocks that have the highest volatility, just because they throw off the highest premiums, isn't the way to do it unless you really understand those stocks. Don't just go to those highest IV stocks.
No, man.
You're just asking for
Aurora
trouble.
cannabis.
Yeah, and keep an eye out for the general market. Like right now, it's earnings season. I didn't realize until, well, this week, how much the earnings seasons throw off the stock prices. Normally, because I've been more of a buy and hold type investor, so a lot of these timing things like earnings season haven't really played into anything I've done.
Mhm,
But now I'm looking a lot more carefully,
mhm.
and wow, earnings throw these stocks and the volatility completely crazy. They go completely crazy.
Right. Yeah, I prefer steer clear.
Yeah, basically this week I've steered clear. I've bought back quite a few of my options. I
Mhm.
think two of them today, three of them yesterday.
In order to steer
Um,
clear or because you were happy with how much you made?
well, they looked like they hit about 50 to 60%.
Mhm,
And I'm like, you know what? I'm not going to be greedy. A couple of weeks ago, I was being a bit more greedy, um, and it was a little bit more, we'll say, a little scarier than I wanted it to be. I want my
mhm,
investing to be a little more boring,
mhm.
and I went too far. I got a little too excited and started swiping a little more than I should have. It gets, I don't know if addictive is the right word, but you start
It's
seeing these numbers go through. It's like it's
yeah,
right there. I just have
yeah,
to swipe.
you see your bank account go up. And sorry, just for the listeners' benefit, when we decide when we to approve a transaction, to approve an order that we want to enter, we swipe right. We're not talking about Tinder.
I don't know how that Tinder stuff works. I guess you swipe right if you like the person. Is that
Yeah,
the
if you like the person, yeah. Like
yeah, so
we like the investment. That's why we swipe right.
yeah. It's pretty easy to do that. So I gotta catch myself and go back, say, okay, what's my criteria? Let's hold to these a little more rigidly. And this week the criteria hasn't been hit for selling the puts. largely hasn't been hit at all.
Mhm.
So, but the puts
Mhm.
that I've already sold, they're hitting 50, 60-ish%. I'm like, you know, this will work for me. Let's pull the money out. Let's take our risk off the table. And then over the course of the next, 2, 3 weeks, by the end of the month,
Mhm.
things should level out, and then I can use my capital a little more safely.
Right. Are you able to share what kind of returns you're getting since you took the course?
Yeah, so it's gone up a little bit, from the first 2, 3 weeks. So the first 2 weeks, it was basically entirely paper. 3, 4 weeks in, I guess, it was kind of, I think when we talked last, it was a mix of some paper and some real. Now it's a lot more, real puts being written, um, and it's somewhere probably about 1.7 kinda thing, per 30 days,
Mhm. Mhm.
somewhere in there.
Mhm.
So it's still a bit conservative. There was an assignment in there. I played around with something I shouldn't have as well. Um, the thing that you say we shouldn't play with. I
Ah,
played around
yeah,
with it
I'm
a
in
fair
that.
bit. I messed around with it more than I should have. I should have done a little more studying rather than swiping,
Yeah, yeah,
um, because that can go wrong quickly.
yeah,
Um,
yeah, very volatile, but things can still work out, though.
yes.
We're
So
we're at an all-time high again, so
yeah, I still have some
just give it a
time.
week.
Yeah, there's 3 real of those and 2 paper ones, but I've still got quite a bit of time left, so I think we'll be okay, but we'll see.
Right. I'm probably gonna get one of them on Friday,
Yeah,
but then I
this
see
Friday?
yeah, but then I see what the covered call's paying. It's paying a lot.
Yeah, yeah,
So it's not the end of the world to me, it's not the end of the world. So before we move, I understand Alex Kowalczyk because we sit next to each other in the office sometimes.
awesome.
I'm not good at explaining this. I understand why you're so good at explaining this because you have much more experience than I do. But I was trying to explain this to Alex, and he's like, "Oh, okay, yeah, yeah. Put the headphones back on. Go back to work." And then the last time I saw him, like, "Dude, I had dinner with Brian." He's like, "I gotta learn this too."
Cool
What do
stuff.
you
Yeah,
tell people? What do you
he's super keen.
He is now after he talked to you. How do you explain this to people? Because it's not the easiest thing to explain.
Um,
Because like you said, like, so much stuff out there is spammy, and then people fell for it,
yeah.
and now they paint the whole thing with the brush. I understand where they're coming from,
Oh, yeah.
right?
Yeah, all you have to do is choose the other type of option, and
Oh,
you're
yeah.
going the wrong way,
Yeah, if
and
they
you're
bought, because 'cause we're all talking about selling,
yeah.
and just to folks, anyone who was listening closely, Brian was saying right. Right is another word for sell. We sell options, we don't buy.
It's like any good business, you wanna sell stuff, right? You wanna sell things. That's the easiest way for me to remember it. I'm selling things to people. I'm selling
Mhm,
insurance.
mhm,
That's the position you always wanna be in, whether it's regular business, whether it's day-to-day life, whatever, you wanna be the one providing, right?
mhm.
So, um,
Versus the
how do
other
I
part is
explain.
speculating.
The other way is complete speculation, and you tend to lose. So it's the inverse risk as well. So we're winning, 70 to 80% of the time, let's say. The other side is losing 70 to 80% of the time, right? They're making a gamble. They're
Mhm,
hoping to get a massive return only, 20, 30% of the time at best.
mhm,
A lot of
mhm.
times people get greedy even doing that, and they go even lower because they see the premiums like, "Oh, let's go down to, like, the 10%." Well, sure, the premium might increase dramatically, but you're gonna the market goes the wrong way, you're finished. So how do I explain it? Basically, for most things investing, I hate to say it, I've stopped trying to explain it to a lot of people. Um, you
People
know
who are interested in learning, because 'cause I'm the same.
Yeah,
That it's a whole Henry Ford. Wow, this really old quote, Henry Ford. Because 'cause we're talking about Henry Ford. Whether you think you can or you think you can't, you're probably right,
yeah, yeah,
right?
for sure. And it
So
comes up all the
assume
time.
someone's interested.
It's basically that, you know, I was gonna I was in if you're interested in these stocks, I'm interested in buying them anyway. And by writing options, you're selling a naked put, you're selling insurance on a stock. You get paid to sell the insurance, and the worst possible case is that you own the stock that you wanted to buy anyway. And if you don't want to own it anymore in the future, you can then get paid again to sell the insurance to get rid of the stock. And then you sell the stock for what you bought it for, basically, because hopefully you've chosen a stock that has good upside long term. So it's a stock that over time should go back to its original to that original price and should bypass should pass that in short order. So you win in every case. And then if you end up holding the stock for longer than you want to, you get dividends as well. Oftentimes it's a maybe it's not not a significant dividend, but it's enough that you're getting paid to hold the stock until you get paid to sell it again. So you're getting paid to buy a stock you were going to buy anyway. If you end up holding it, you end up getting paid dividends. And if you want to get rid of it, you get paid to get rid of it, and you get your money back when you sell it, for as long as you've chosen the stocks correctly and you're not overly greedy in any, at any point of the process. All the disclaimers apply, but you're basically getting paid multiple times in each direction. I don't know if that makes sense. Maybe it's too wordy, but
It makes sense to me.
like,
And folks, if folks for this is too hard for you to understand, go back and read the books that we suggested. Money for Nothing by Derek Foster. Rosario was asking about it earlier, and then the book that covers covered calls is Get Rich with Options, and I have that right here. And in case anyone's listening, like I didn't clean out Amazon of all the copies of Derek Foster's Money for Nothing book. So this book covers covered calls, and you can find covered calls on YouTube as well. Just stick to non-spammy sources like Investopedia. They're not so I've never felt that they were spammy.
That's a good point. These books that we're talking about, these are the least spammy. They're written by people who have some track records. There's so much junk out there that you'll find that people that are in the industry or into investing, they'll talk about the same books over and over and over again, because there's really only there's a handful of old world masters that their track record is, basically impeccable and oftentimes completely public as well. So somebody like Benjamin Graham, another one, actually, I don't know, I'm not name dropping or anything. I read these things. I don't know these people. I just read their books and I like them. Another one is Jarzlowski, Investment Zoo. There's some good stuff in there about overall value investing as well. Yeah, in that book, I actually found out about that book by a Canadian guy who's into the same kind of dividend-paying stocks, holds for the long term. Trying to remember his name now. Let me think here for a second. I got it'll come to me in a minute what his name is. But it's got a simple website. I think it's Dividend Investing. I'll come back to it later. Maybe we put it in the notes or something. But
Okay.
yeah, they got Peter Lynch. Peter Lynch always has some good stuff. This one, Beating the Street, it's kind of a well-known one. Yeah, so there's some good stuff in there as well. It was in background and history. And then something that's kind of been interesting to me more recently is things that are happening in Asia. Just because I've been there a handful of times recently, I'm seeing the insane growth. And while there's a lot of problems with their market overall and stocks and a lot of bad things happening with companies over there's a lot of fakes and things that he can't trust. At the same time, there's real growth happening. People, there's I don't know what the stat was about how many millionaires were made in China versus the rest of the world. Just like in China the last 10 years versus the rest of the world ever, kind of thing. There's some stats about that. So someone who talks about that this is from decades ago, Jim Rogers. So this guy spent a lot of time way back when the stock market first opened in China. He went to the counter and bought stocks, and they didn't know what to do with them. Paper stock trading at a counter is like the first guy from the Western world that showed up is like, I want to buy some shares of your companies, and they're like, we're not sure we can do that for you. And this guy rode his motorcycle across China, and he spent a lot of time there. He's is an amazing investor with a heck of a long track record too. So anyway, it's just some history. That last one's more of almost a personal interest thing, but it factors into what's happening in Asia. I'm not sure what to do with that yet, investing wise, but big things are happening there.
Mhm.
I don't trust putting my money into stocks there yet. I'm just not sure
Yeah.
how to play that.
With that culture, I'm Asian, and so no one send hate in, so I can say these things. Like when I was there, when I was in Hong Kong last time,
Mm.
I could it was I forget which time I was there, but I could still see people were trading Bitcoin on their phone.
Oh
And if I
well,
see stuff like that's doomsday to me. That's stuff that means you should stay away from it. And I don't feel the stock market is that different. I feel it's highly speculative. So then,
yeah,
and when something's that highly speculative, valuations don't make sense. But then we kind of see that. I was just reading an article about because I didn't follow the weed market. I was never interested in it.
no, me neither.
I was reading how if you combine the market cap for all the weed companies in Canada, it actually
Mm.
exceeded the market cap of our grocery stores.
What? That's crazy.
Isn't that absolutely okay? Was no one watching this? No one. So for the listeners' benefit who don't understand what I'm saying, it's basically saying that we're all gonna consume more weed than we do groceries.
Yeah, exactly. And that's a great case where valuations do not make sense for those weed companies. They're insane.
Sure, that makes sense.
So you look at fundamentals for these companies, and that should give you all you need to know about should you be investing in them, or are you just speculating and gambling? If you want to gamble, I mean that's up to you too. Some people
Yeah,
enjoy that.
yeah.
I'm not into that. If I go to a casino, I don't even care to pull the handle on the slots. It's not my thing. I take in the people and see what's happening, the lights and stuff. But I get no joy from gambling at all. So, the guy was just I couldn't remember before. Thomas Connolly. It's from dividendgrowth.ca. It's a really simple website. He's an older guy. I think he might have been a teacher of some kind in Canada and Ontario. Um, but he's got some awesome information on there about
Mhm,
dividend growth investing, talking
mhm,
about these like old stalwart, blue chip stocks that continue to increase their dividends. Ton
mhm,
of information. I actually went so far as getting so he's got a newsletter. He used to have a newsletter.
mhm,
He stopped producing it now. He'd produce it for like decades, nonstop,
mhm,
kind of like
mhm,
dividends payout. He, but he stopped doing that recently. But all his back issues were available at some public libraries. So I actually used to go to the library in Toronto and in Guelph when I was passing through, and I'd stop and I'd go and read through the latest newsletters. That's how much I was been into it. The last time I did it was just about 6 months ago. I went in and grabbed the last few newsletters. They're usually at the reservation desk. Like you have to go and you can't take it out
mhm,
of the library. You can
mhm.
make copies if you like, I think. But just sit and read and figure out and find out what's happening in the market. It's got charts and stuff. But I mean, that was like my fun Saturday afternoon. My family would go to my parents or my in laws' house, and I'd continue on to the library on my own and spend a couple hours reading this Connolly report.
So how does this all work with what you're doing now with your stocks or options? And then Brian, I have to ask you like how much time do you have? Because we haven't talked about e-commerce yet.
Yeah,
I might have to have you back on just to talk about e-commerce.
no problem. I'm pretty pretty free with time. Well, and busy at the same time. I can make up my schedule mostly how I like. Um, so pretty open that way. Um, yeah, I mean, I can keep going.
So how does this play into what you do? For example, again, okay, folks, this isn't a recommendation. Disclaimer time. You can lose all your money. But for example, I saw you did a trade on McDonald's.
Yeah.
What was your thought process behind that? Go through all these books and stuff. How it all played in.
Yeah,
Yeah, what's the
there's
Schiller Cape on McDonald's?
yeah, there's a lot of details there. To go back and justify every trade, I think I think Matthew mentioned in one of the classes, or maybe it was online. It's like to go back and justify every one.
Yeah.
Well, I can, you know, to go back and tell you exactly what it was. I don't know off the top of my head exactly what that was. I've done quite a few
Mhm,
trades before
mhm,
and since then.
mhm,
But something about the company, the price that it was selling at made sense to me for the volatility, historical and implied. It made sense at the time, and that people seem to keep buying McDonald's, whereas I don't usually eat it. it actually upsets my stomach. So I actually don't eat McDonald's. It's kind of contrary to things that something Buffett might say and do. He actually drinks Coke and he likes hamburgers and that kind of thing. Yeah. So while I don't use their products per se, they have changed their menu over time. People still like to eat there. My
Mhm,
kids still really love it.
mhm.
They're totally into it. Kids seem to lose their minds for it still. You know, decades later. But so I think they still have some future growth happening. They've been going into markets around the world, not just North America. It might feel like we're saturated here, but they have been going in other markets. It hasn't always gone great for them, but they're still growing.
Yeah, their salads are pretty good.
The only thing I used to like from them was their pizza, but that came and went pretty quick.
So, Brian, something we missed out on is like, what is life like for you?
Well, I
Like
don't think
talking
it's
about like you talk about all you've read. You go to the library and stuff to open up reports and stuff. I don't think I know anyone who has spends that kind of time like you do. And I actually know like you have a lot more freedom of your schedule than anybody else does.
That's probably half of it. But I was doing this before too. Even when I was working a lot, I was still sitting and reading for hours. A lot of these books I bought when I was doing 100-hour week, a few of them 100-hour weeks. I was still buying them. That didn't change. And through university, doing, computer science type stuff and doing business management stuff. Like I was still reading other stuff on the side because it interested me. Even
Mhm.
at the end of high school, one of my projects was a economics class. I remember, I think it was grade 12 economics. I did a project on mutual funds. That's actually what prompted me to go see the financial advisor. I got through this project. I'm like, wait a minute, this affects me. What's life like? I'd love to give you an awesome soundbite, but truthfully, things are pretty normal. It's nice to have.
Well, hang on. Your day at normal is different than other people at normal. Like for example, where you live, that's a bedroom community. I bet half the town empties out every day and comes back. I bet you more than half that town empties out every day, and then they come back 6, 7 o'clock at night.
Yeah, I did. Sometimes the next day. So
See,
yeah,
that's normal. That's normal.
this
That's
is
not
true.
your normal.
That's true. And the kind of time freedom we have, and we can travel and do things. I have the option to do things. A lot of times I don't, because I don't think that I'll get the kind of joy that the price entails. That might change over time. But basically, I just like knowing that I have the option to do what I want when
Mhm,
I want to.
mhm,
Um, that option, um, that knowledge of having a foundation and having the ability to live free, like I don't have to do, there's things you have to do every day, but I don't necessarily have to in order to eat tomorrow, kind of thing. A lot of things like people say, oh, I wake up, I hate my job, I don't want to drive in, or I don't like my boss, or whatever it is. Well, I, I don't have those kinds of problems, which is nice. I have other kinds of things happening, of course. Whether it's shipments in China and trade tariffs, or watching these stock options. There are different kinds of problems that you end up with. And I was talking to
mhm,
Greg yesterday.
mhm.
Um, and we're
Greg
talking
is
about,
Brian's business partner in Ecom VIP. In case anyone doesn't know, Greg Kowalczyk, very smart guy.
yeah, and Greg. I mean, we're chatting, and I'm like, you add a zero to your problems, and it's still a big problem. Like, it still like feels like the end of the world that's happening today. But with enough history, you learn that you can get through this. You can get through, hopefully, just about anything that life throws at you. Um, but knowing that there is a foundation, something to fall back on, I've got some choice and ability to test things out. So, like when I went too far with some of those options, it's not going to sink me. You know, um, I didn't like how it was turning out, but it's not going to sink me. It's not the end of the world. Same with, let's say, if we have to do like a renovation. Um, it's not the end of the world. Maybe I don't want to spend the money to renovate a property, or to repair a property after I had to evict somebody. or my own house, having to redo the basement, for example, or the kitchen or whatever, buy a new car. Like, it's like, oh, damn, I gotta get another car. All right, I guess I'll get a car. Um, it sounds flippant the way it's coming out, but it really is just I'm not going out buying a Ferrari or anything, unlike maybe people south of the border might. Um, well, I'm not against that. I love fast cars. I love racetracks. I love all that stuff. I really do. But that comes with its own problems. You have
Mhm,
a nice car like that. You got to drive it. You got to keep it up. It's going to take time away from the thing that made you the money in the first place and the thing that you liked in the first place.
mhm.
So instead of reading books, which I really truly enjoy and cost next to nothing, I'll have to put $10,000 on brakes on a Porsche. Is that the smartest thing? Yeah, you know, it's probably there's some fun involved there, but
Have you
yeah.
splurged on anything?
Little things that hard won't go into to all of them. Those kind of things. Now, is it talking about how you make your money and business is one thing. When people can get strange about talking about stuff like that. So I won't go into details like that. But you know, yeah, there's things just this week. The kinds of people or custom builders of things that we interact with. We can because I want to. The way I always do things. My wife laughs at me all the time about this stuff. When I look into something, I look at the very best first. Okay, what's possible beyond what I could have possibly imagined? What is the craziest, best, most insane, version of this thing that I'm looking at? Whatever it happens to be, absolutely. Whether it's a vacation, a car, a bed, a mattress. I mean, anything. What's the insane version? Now let's dial it back to where I can, I can justify how much I'm willing to spend on this and still get all of these things. Um, so I'm happy to do that. Like I like the research part and the reading and all that stuff. So I get to exercise that part of my
Mhm,
brain, I guess,
mhm.
without going completely overboard. I know it's not the kind of thing maybe the detail you're after, but
No, I'm just
it's
curious.
it's a we do we have options to do things. We don't always exercise them, but they're there. But like I've got like a 13-year-old diesel vehicle, right? And we have
Yeah.
another. My wife has a nicer car, but like why it still works. And I like messing around with it too. Like I like doing technical stuff. Um, so I look into the best kind of tires and whatever. They do the same kind of crazy thing. It's got crazy tires on it for the vehicle for what it is. Why? Because I can. There's summer ultra high performance tires, and I get winter tires on it in wintertime. But whatever. So that's this little thing that maybe most people might get it all season, and then a winter tire. I'll spend hundreds of dollars on a tire because I know it's the very best, and I can play around with it a little bit more and enjoy it. It gives me
Uh-huh,
some joy from there,
uh-huh.
from doing that.
This is almost like Warren Buffett type
He
splurgery.
he still lives in his first house, right? I think he's renovated the heck out of it, but he still lives in his first house basically.
Mhm.
And one of his biographies, his daughter was quoted as saying that she has to force her dad to get new cars after they get ratty and old. She's like, "Dad, this is ridiculous. For the kind of companies you run, and just for your safety, and if nothing else, you're embarrassing yourself. Buy a new car." And then what he does is, I think it's quoted in that book. As he buys cars that have been damaged in hailstorms, so they're bought at a discount.
Right, it's just cosmetic damage.
Yeah, it doesn't hurt the car. It's still a decent car, and he's not driving around, $100,000 cars. They're pretty regular cars from, at least they used to be, from when that book was written. But hail damaged cars, probably from the Midwest, bought at a discount. Same thing. I bought it. Both my cars are used. They still work. It's time to replace at least one of them. I'll probably have to be pushed into it, but they still function. Same idea.
Amazing. No, it's just interesting to hear, I just think it's all fascinating. I talk about, Buffett as well. Like, my last car lease, was a, demo car.
Hmm.
Like, what do I care that
Yep.
it's been driven for 2,000 kilometers before I
Yeah.
will take the 10% discount, wherever the discount was.
Yeah. Still under warranty, right?
Yeah, then it's
Yeah.
still a full warranty.
You know,
Uh,
my fridge in my own house, we went looking for a new fridge, and they happened to have, a fridge outside. At the time, it was a while ago now, it was Future Shop, so this is a while back. Um, and we
right.
pulled up, we were just looking for a plain, like a black fridge or whatever, just something simple, nothing too fancy. We knew the dimensions, and they had a stainless fridge out front. And we asked the salesperson, they're like, "Yeah, someone just brought it back. I'm gonna have to cart it inside. It wouldn't fit into their house, so it's got a scrape on the side where they try to jam it in between their cabinets." I'm like, "Okay, what's the price?" Like, the price ended up being less than we were looking at paying for a regular black fridge. I'm like, "Cool, sold. Still has warranty. All right, let's do it. There's no downside
Mhm,
to this.
mhm.
Let's do it." So it
Oh,
was,
yeah, I used to buy everything from the Maytag scratch and dent store.
yeah,
Everything.
yeah, I like those kind of places.
Love those places. Often just the packaging was damaged.
Yeah. Yeah, for sure. Little things that mean nothing, or there's a scratch or a dent somewhere where you're not gonna see it anyway.
Yeah, who
Why
cares?
waste your money?
I know.
It doesn't, money's money. It doesn't, maybe it matters less as a percentage purely mathematically
Mhm,
if you have more, but you're still wasting it. There's no
mhm,
need to.
mhm,
Spend it on the stuff that matters, that's actually gonna make a material difference to your life or to
right.
your kid's life, and that's actually something we didn't talk about. That's one of the big things, though, for me,
Mhm,
is that I want my kids to be free forever. I want them to experience freedom for their lifetime. I know traditionally, historically, the numbers say that, you know, generational businesses and generational wealth tends to end, one generation down. The kids tend to burn the money and do crazy things. I'm hoping that by seeing how we're living, that they will continue the same way for their life and pass that on while
mhm,
still having the security and safety of knowing that they have freedom to explore and experiment in the world with different kinds of jobs or travel or whatever it is they want to be doing,
mhm,
and knowing that they're still secure. They're still going to be able to have a roof over their heads and eat.
mhm,
And if they want to, if they choose to, they can still do some crazy things, but it won't bankrupt them. And they're not going to be doing things like, some of the insane things people do with, cars and travel that they could do.
mhm,
Just knowing that they are free to explore for their life. That's
mhm.
really what I'm after.
Cool. I was actually reading an article from about 2015 from a it was a financial advisor that actually specializes in working with kids of rich people.
Wow,
Yeah.
that'd be interesting.
Oh, yeah, I'll try to find it and send it to you.
I'd love to read that.
It was the key takeaway was to me was, uh, families that pay for all the university,
Mhm.
all of it, those kids failed at a pretty high failure rate,
Wow.
right? Versus her recommendation was make the child pay for the entire first year,
Hmm.
right? All of it.
Yeah.
But there's she says there's no perfect formula. Like, maybe make them pay for 10% of everything, for
Okay.
example, depending on how unaffordable it is, right? Like,
Yeah.
if you're like, for example, I have family friends who are doctors, and their kids could not get into medical school in Canada,
Wow.
so they had to go to Australia,
Yeah,
and everyone
I know someone whose daughter,
right?
went to school in med school in Australia. Yeah.
Right, and so they had to pay the non-resident university tuition. So for us,
Yeah.
med school is like, I don't know, like, say it's 10,000 for a Canadian, and then if you're an international student, it's like 29,000. So
Yeah.
that's probably what they're paying in
Yeah.
Australia.
I
They're
think
paying
it's
like
even
30.
more. I think it's even
So
the difference is even higher. It's crazy.
say it's 40,000. I can't expect my kid to pay first year.
Yeah, I if you can help it, if it's the difference of them going to school and being out becoming a doctor and not, I
Mhm,
mean, I think you would probably help them.
mhm,
Um, yeah, some people say they won't. Like Buffett has some stories, like in his biography, he
mm,
talks about a loan he made to his son, and he had to pay it back with interest.
mhm,
He's not messing around. Like, it doesn't matter what you see out
right,
here in the stock markets. Forget all that. This is
right,
family,
right.
and we work and pay back our debts. So I think I'm more on that side of things.
Yeah,
Like, you got to
I
work.
they gotta work. They have to earn it. They have to like, I want my kids to suffer. I want my kids 'cause I even think that they'll learn good social skills, for example, just to wait on
Yeah,
tables, right? Learn
yeah,
learn to talk to people. Don't be afraid of people. 'Cause I've seen that with rich kids too. Like, they won't look you in the eye, the
yeah,
limp handshake, stuff like that. Like, you learn to, be able to approach anybody,
yeah.
right?
super valuable. There's the opposite though. I think it can go too far at the same time. There's a lot
Mhm.
of the giving pledge stuff that's happening. A few of these guys have kind of reneged on parts of it. But one person, I think Spelling, um, is a TV producer guy, like the
Oh, Tori Spelling's dad? Aaron Spelling?
yeah, yeah. So if I remember right, I think she ended up with like literally nothing. She ended up with nothing at all. Or
She should have been rich. I remember her name 'cause it's Tori Spelling, Beverly Hills
Yeah.
90210.
Yeah, it was a big deal. I remember way back when she did I think she went for the role under a different name, so they wouldn't see her dad's name, 'cause her dad had, like, produced the show, if I remember
Yeah,
right.
yeah.
So she went in as an assumed name and got the role, like, on her own, if I remember the story. Um, but in the end, I think she got next to nothing in the end, like, truly had some money problems too. Which is
Hmm,
crazy, like, they were like, her parents would have been, like, beyond, the super wealthy, like, way out there, stratosphere. But yeah, I think she ended up with next to nothing. So I think that's maybe going too far. You want what you built, you want that to provide some security, I think, for future generations if you're able to do that. I think there's some value there. It gives them choices and options and the ability to see things and try things in the world that maybe they
mhm,
wouldn't. And they might be able to, you know what, it sounds cliche or cheesy, but maybe they'll be able to improve the world in some way just by having some freedom to explore that they wouldn't have otherwise.
right, right. Step 1, though, is to be able to make them responsible young people, though.
Responsible young people, yes, on that side. But on your side, you know, there's also a weird thing happening in the world.
Mhm,
That's why I'm also a little bit shy about going into some of the details of, you know, there's a lot of negativity around making money out
mhm,
there, especially
mhm.
in some of the social media stuff,
Yeah,
which makes no sense to me.
and in school, and in university.
Yeah, it doesn't make sense. Like, as Canadians also, we also have this odd shy thing happening.
Mhm,
I'm more on that side than, say, the US bombastic side anyway, so I'm not
mhm,
against it. I just think that things are a little weird, especially in social media, where some of these people, they're making millions themselves advertising things and being on social media every few hours. And yet at the same time, the people they interact with, and a lot of times, a lot of what they're talking about themselves is that money is evil or bad in some way. And makes no sense.
mm,
The people who have been able to make money oftentimes are likely better to allocate that capital and improve things for others more than other people who haven't worked for it, generated that money, and found ways to find efficiencies in the system. That's why they made it. They
mhm.
can probably help you in the world in a way that you couldn't do that for yourself. I don't want to sound, like I'm not helpless, and I don't think people are helpless in any way. But I know lots of people, most people, everybody knows something that you don't know and something that I don't know. That's why I'm reading all this stuff all the time. I'm I As I learn more, I realize how little I really know. And it makes me want to learn more and learn from these people and maybe
Interesting.
contribute some way later.
I know it's not reading, but apparently there's a really good, Bill Gates Netflix documentary. My wife
I'll
was telling me about it.
I'll have to find the
Yeah, you'll like it because I know he's trying to do massive change
mm,
because he can.
yeah,
Um, and some of the major takeaways is he could not do what he's doing without money.
yeah.
Like, for example, he's trying to try to create solutions for communities in Africa that
Mhm.
don't have sewer systems.
Oh,
Because
okay.
like we were talking about CNR, like think about how you're gonna create a sewage treatment
Wow,
facility in Africa.
wow.
You basically can't. So he needs some out of the box, um, you need some out of the box solutions, but no one would help him.
Yeah.
Like for example, he was trying to invent, I think some sort of compostable toilet, basically.
Okay.
I'm not explaining it correctly. I'm only hearing this from my wife, but basically, Bill Gates was emailing all these universities for help,
Wow.
asking them if they would look into it. No one even responded. It was Bill Gates emailing you. I mean, Bill Gates emails me. I don't care. He texts me, DMs me. I'm responding to it. No one responded to him. So then
Wow,
he put up a $77 million bounty for someone to come up with it. And then people came forward with designs for this toilet.
that's amazing. And didn't he basically single-handedly, with through his foundation, just about eradicate malaria? Isn't it?
That's what, yeah,
It's
yeah.
on its
That's
way
one of
anyway.
them. That's one of them,
With
right?
netting and whatever else they were doing, like,
Hmm.
I think
Yeah.
they really pushed the eradication of malaria
Hmm.
very far.
Hmm.
And you can't do that no world government has been able to do that for all the aid that's been
Hmm.
sent, airlifted, and all the human capital that's been sent to all these countries, especially in Africa with malaria.
Hmm.
No one's been able to fix it.
Hmm.
And this guy walked in with a supposed, evil cash and fixed it. How evil is
Hmm.
that when you're trying to fix, worldwide problems,
Hmm.
or at least actually, yeah, malaria could affect anybody.
Yeah.
So yeah, I don't know. I don't get where the evil thing comes in. Yes, there's people that it turned money can accentuate, somebody who has evil in them. Sure,
Hmm. Absolutely.
sometimes it can change people and make you do weird things.
Hmm.
Um, I get that. But I think a lot of it is actually overall, think about how good your life is compared to what life was 50 years ago, 70 years ago, 100 years ago.
Hmm.
And where did a lot of these improvements come from? They were generated by capital, by cash.
Hmm.
A lot of times it's not a huge amount of people that also push this stuff to the forefront that got this stuff done. Like you said, about Bill Gates he's emailing people himself looking for help. It's
Hmm.
one person, maybe an assistant, but basically one person
Hmm.
going out in the world and seeing what they can do to fix it.
Hmm.
More often than not, it's a small team, 1 to 3-ish people that are really, small, close knit teams that are pushing things in the world.
Hmm.
Um, it's not governments. Um, it's not just like a faceless corporation. It's a person that's really pushing it.
Hmm. And then because I do charity stuff, I'm interested in like charity
Mhm.
philosophy. So my favorite charity philosophies question is a rhetorical question. No one has the answer to this. So Mother Teresa is a saint. No one's arguing that, right?
Yeah,
No argument here, right?
yeah.
Bill Gates is trying to wipe out polio. Is Bill Gates a saint? Remember, rhetorical question. No questions,
Mhm.
no answers required. So I just found that fascinating.
Yeah.
Yeah.
Amazing place, amazing times we're living into.
Mhm. I need to read more books like you because I'm all my references are like from like TV. Because he was on Ellen just recently,
Okay.
and I believe I think he's cut. So the death rate for children under the age of 5, I think he's cut that number in half in Africa.
Wow, that's
Right?
crazy. In
Yeah,
Africa? Or
I think it was in Africa.
wow,
Yeah, like, that's
that's amazing.
at least. I'm sure it's just the areas he's servicing, but
Mhm.
good. But wow.
Yeah, think about that kinda change, like, the scale of that change, you know? Um, I'll say as a side note, my tech career was spent in, on the Linux side of things, so I actually was, like, kind of opposed to most things Microsoft. But I
Mhm.
gotta admit, for what he's now been able to do with that Microsoft money, man, it's unbelievable. It's a scale that even governments, they can't even do a lot of the stuff he's doing. Obviously, they haven't done it.
Mhm.
They haven't been able to do it ever.
Mhm.
He's doing it. So that Microsoft money, while technically maybe I'm not on board with his point of view of the world where it was before with Microsoft, I got to say what he's doing now with that money, I don't know, he's doing good.
Are you gonna sell
Massive
naked
good.
boots on Microsoft?
And now making money from it. Yeah. Yeah, absolutely.
Brian, I've had you way over time. This has been a pure pleasure. I have to have you back for e-commerce, so I'm going to change the title of this Facebook Live. So this will be my podcast. Actually, as a teaser, can you tell us a bit about e-commerce and what you've accomplished with it?
Yeah. So, personally, I went from nothing and thinking that e-commerce, some of it was a scam.
Right?
Basically
There's a lot
started.
of spam. A lot
all
of
the
stuff out
spammy
there.
stuff, basically the same thing. I was doing the Google searches, make money online and stuff, and then getting all these ads come back at me. And it all was super spammy. It all looked like a bunch of crap, basically. But I took a course and I took another over time. Over the last 5 years, I guess I've taken all kinds of courses,
Mm,
figured out what's real and what's not.
mm,
We've gone from basically $60 in John Deere toys just to test it out if this thing was a scam. Now, for example, I've got 2 containers leaving China right now for just two products alone. So we've scaled up quite a bit from literally like $60. And it's gone quite well. With Greg, we actually met at Rockstar in one of the training classes, and he mentioned he's doing something with e-commerce. I'm like, hey, so am I. I just started this thing. Let's chat. That was about 3.5 years ago. Since then, we've been to China. I think it's 5, maybe 6. I think it's been. I've lost track now. I think 5 or 6 times anyway. In the last 3 years or so.
mhm, mhm,
We've been taking groups over too to show people what we're doing there, talking with suppliers, working with the different culture in Asia and how that all works, figuring out what products to buy and source, and how to sell it and advertise it and all that stuff. So we've been doing that side, partly for us to grow our own businesses, but then also to teach people and let them know, like, hey, this isn't crap. It's not spam. Here's a couple of Canadian guys that figured out a few things about e-commerce. Here's how we did it, and here's how it differs from what you typically see online, like on the American side. There's a lot of things they do in the States we can't do. There's a lot of things, so, company structure and taxation, even shipping and warehousing. It tends to be different here.
mhm.
So there's a lot of things that we go through that. So we're showing people how that all works, and
Right,
we've got
right.
a small, strong group that we're teaching and growing, and it's unbelievable the kind of questions that people are coming with now, going from zero, just learning like, is this thing for real, all the way through to we've got people now doing sea shipments. They've got multiple shipments that they've sent overseas, and they're doing quite well. It's amazing. Yeah, so we're doing that. We've got live kind of webinar things that we do every couple of weeks, every couple of Wednesdays. We've got a live meetup that we do. Initially, it was going to be every quarter, but now it ended up being every 2 months. As we liked it so much, and we had a couple technical glitches with the recordings, so that we'll just do another one, and we'll just do another one. So we've ended up doing every couple of months these live meetups. So that's awesome, and those meetups are unbelievable. So yeah, we've got a group of people, and people are free to join. There is a cost to the group, but yeah, we do make that available to people if they want to learn more about e-commerce, what we're doing, and how it all works.
Mhm. Is there a website you can give or
Yeah, so there's a couple of ways people can find out more info. One is so ecomvip.com/register.
can you
Um,
spell it, please?
ecommvip.com/register. There's information there about the group. I know it's a long URL. For online stuff, I know we should probably fix that one up. It's better than it used to be. Also, we're also running. We do free classes out of the Rockstar offices, totally free for Rockstar members. There, go in there. You can check us out. We do pretty regular free nights. We do a quick overview, basically, of what we're doing and how it all
Mhm.
works, and you can get more info that way as well.
Right. Do you do any free training for non-Rockstar members?
We haven't done anything outside of Rockstar
Okay.
directly, but going to that register page, you'll see what we're all about. I think there's some videos on there as well, also about our China trips. We do
Mhm.
take people to China as well. Um, Historically, that's been mostly it's been people that have not done any selling that's come to China. Crazy people, we love it. They basically said, "What's this e-commerce thing? I'm going to China with you." Cool. I love it when people just like grab onto things. Um, but then after that, people are like, "Can you help us afterwards?" Now we're like, "Yes, we can." So that's where the group came from. But so we do the trips as well. They're crazy, super fun. But yeah, we haven't done anything outside of. Oh, sorry, 2 M's, Rosario. I just saw the comment there.
Yeah, that's why I asked you to spell
ECO,
it because I spell it with one M usually. I spell it both ways, so that's why I asked you to spell it.
yeah,
Rosario E
EC,
two M's.
yeah,
ECOMM. ecomvip.com
Yeah.
slash register.
Yeah, because without the slash, it's a pretty simple, boring looking site. The register actually gives you your info that hereafter. We probably should switch that around. I know it's crazy for an e-commerce company, but we focus, like most things in our lives, we're
Mhm,
focusing on what makes money, what makes progress, what makes a difference in our businesses and our
mhm,
lives,
mhm,
and what makes differences for people that want to work with us. Like a pretty site, versus good content. There's like 100 videos or something that Greg and I have put together in there, all transcribed, lots of info going from zero up to talking about how do you sell, how do you market,
mhm.
the whole range. How do you choose products, all that kind of stuff.
So before I let you go, if we could just take one question. It's Bel Calmo, so it's Adriano's brother-in-law. Adriano Arpaisan. Adriano the electrician.
Oh
The,
yes,
the,
yep.
the market's on a huge run, and you said you're very analytical. So what do you see? Are you worried about Black Monday?
I've been worried about the top of the market, like I said, for like most of the last decade. Um, that's. But I've recently, and like I said, I've been sitting on capital, but it hasn't been working for me. Like, sorry, the money hasn't been working as much as it should for me. So with these options, there's things you can do if these naked puts turn against you. There's opposite strategies basically you can run
Mhm.
that I haven't. I'm far from mastering, and I barely understand that part of it.
Advanced class. Don't worry, it will be covered.
But I do understand that there's an opposite strategy to run. Am I worried about it? So, on the one hand, for my own holdings that are the dividend paying stocks, not at all. I
Okay.
haven't paid attention basically to what the overall market has done for most of the last 10 years. Not really closely. I follow it peripherally and I understand what my companies are doing. I watch to see if my companies are going to be cutting dividends. One of my picks did, MFC, so Manulife Financial. They cut their dividend. I cut them basically immediately when that happens. They're gone. They're no good to me at that point. At least they weren't before. At least now I can probably turn that into some cash with the right puts, assuming they're trending the right way. Um, so for my long term holdings, I don't care one bit about what the market does. It's very likely my dividends will continue to be paid and continue to be increased. So I'm okay there. With the puts, yeah, there was definitely some worry that the market will turn on you. But like I said, I think there was this opposite strategy you can run, which I'm not completely clear on. So I do have some worry there, and I haven't gone all in on the strategy at this point because I still feel like I don't understand enough of it. I understand more and enough to start consistently dipping my toes in. Um, with real money and also doing quite a bit with the paper accounts. So just doing like the fake trading kind of thing, get used to it. But
Mhm,
going all in, I'm not there yet because I feel like I'm still missing a few really important pieces. If the market takes a dive, I'm not 100% on exactly what I should be doing at what time with that.
mhm,
I hope that
mhm.
helps.
Brian, again, way over time. Thank you so much for doing this. Ecom VIP folks. Ecom with two M's. ECOMMVIP.com/register. And then don't bother with social media and Brian. All right. Thank you very much.
Thank you.